Good morning, everyone. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you for joining us on our breakfast meeting this morning. It is Thursday, the 5th of August, 2021. As always, this meeting is being recorded and may be shared with third parties. It is also being streamed live on our Vetiva online page on Facebook, and the meeting is set to last for 20 minutes. If over the course of the meeting you have any questions about what the speakers have said, you may drop a question in the Q&A box and we will treat them after all speakers are done. On our agenda today, we will get a rundown of the equities and fixed income markets from our traders for those respective markets, after which we will move to Frontier Africa Reports with their own updates. We will now start off with Symbiat from our Global Equities Desk with equities. Good morning, Symbiat.
Good morning, Dozie, and good morning, everyone. So I'll be starting off with BRVM. The BRVM recovered from the negative close it had on Tuesday as the index gained 49 basis points yesterday. This was due to price appreciation we saw across sectors. Leading the chart was Solibri Cordova in the consumer goods space, to Bank of Africa, Benin. We also had Cital from the industrial sector gaining 4.35%. Turnover declined in this session. However, we had more gainers compared to losers yesterday. Going into today, we expect to see improved market activity and on back of increased buy-side activity. So over to Ghana, the Ghana equities market was closed yesterday for the Founders Day holiday. So I'll be moving quickly to the Nigerian equities market. The all-share index closed on a slightly positive note with just 3 basis points gain. We saw price appreciation in some names across sectors, the likes of Presco, NACO, FCMB, and Access, also modest gains. We have continued to see market trading mix or activity level declining in this week's trading sessions as sentiments have been tilting more towards negative. For yesterday, we had both trade volume and turnover decreasing by 10% and 49% respectively to end what one would describe as a quiet session. And also market breadth remained negative. For today, we expect to have a mixed trading session with the possibility of profit taking in some names that have gained in recent session. That will be all from my end.
Thank you, Symbiat. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning. Good morning, everybody. System liquidity declined slightly yesterday to open around 155 billion positive from the 158 billion positive that was recorded on Tuesday. As a result, interbank rate tightened by over 100 basis points as OBB and overnight rate closed at 8.5 and 9% respectively. For today, we expect interbank rate to trade at higher levels as market players make funding provisions for the FS retail auction that is slated for tomorrow. The parallel market gained about 2 naira yesterday to trade at 506 naira to $1 from the 508 naira to $1 it traded on Tuesday, while the earning window opened at 411.34 naira to $1. The highest rate that was recorded yesterday was 413 naira to $1, while the closing rate was 411.5 naira to $1. After 3 days of consecutive losses, oil prices rebounded amid tensions in the Middle East as Brent and WTI gained about 0.2% and 0.3% to open today at $70.52 and $68.33 per barrel, respectively. The TB's market ran on a very calm note yesterday with demand on the long-dated maturities, as we observe interest on the 14th July 2022 and the 28th July 2022 maturities. Trades were majorly consummated on these securities as average benchmark rate declined marginally by 1%, 1 basis point rather, to close at 5.49% at the end of yesterday's trading session. For the OMO market, it traded on a relatively active note with mixed sentiment seen across the benchmark curve. We witnessed slight interest on the mid-10 note papers, especially the 22 February 2022 maturity, while trades were majorly consummated on the 31st August 2021 and the 7th December 2021 papers, with average benchmark rate declining marginally by 1 basis point to close at 7.86% at the close of yesterday's trading session. For the bonds market, it continues to trade on a very quiet note with slightly bullish sentiment seen across some selected maturities. We observe interest majorly on the mid-end of the benchmark curve, particularly the 2028, 2035, and the 2037 maturities, while trades were majorly consummated along the short to mid-end of the benchmark curve, especially on the 2024 and the 2036 papers. Overall, average benchmark rate declined by about 3 basis points to close at 12.54% at the close of yesterday's trading session. The Euro bond market traded on a very active note yesterday. Asset side interest were seen on the long-dated sovereigns. That's the Nigeria 2032, 2038, 2047, and the 2049 maturities. For the corporate space, it traded on a relatively muted note, with activity only seen on the Zenith Bank 2022 Euro bond. For expectation today, we believe that the bonds market will continue to trade current sentiment in the absence of any clarity on interest rate direction. While for the T-bills market, we believe that activity will be largely skewed to the OMO segment, while the T-bills market overall will largely trade in line with system liquidity. That'll be all for fixed income. Thank you very much.
Thank you, Maria. We will now move to Faith from Frontier Africa Reports with their updates. Good morning, Faith.
Good morning to you and good morning, everyone. From Frontier Africa Reports, we start from East Africa, where the regional investment firm Centrum is seeking to sell part of its shareholdings in Two Rivers Development Company, PLC Limited, to retire a 4 billion Kenyan shillings debt, short-term debt. This is approximately $37.06 million US, and it is about 4 billion Kenyan shillings. Brigham Holdings is a Nairobi listed firm. It has named Zimbabwean Vetiva as managing director to replace the company's long-time managing director, Warege, who retired in January this year after working at the firm for 40 years. Despite that, there were so many calls, and people were speaking that the firm should turn to a member of the finance division or an insider. Jean Michael N.G. Young has been appointed as the CEO designate for MCB Group Limited. It's a financial services holding company. And here in West Africa, we start from Nigeria, where the Debt Management Office, DMO, has appointed 8 international and domestic transaction advisors in preparation for the issuance of about 2.343 trillion naira, which is $6.2 billion Eurobonds in the international capital market to finance the 5.2 trillion naira 2021 budget deficit that the federal government has appointed the 8 transaction advisors to include international book runners and joint lead managers JP Morgan, Citigroup Global Markets Limited, Standard Chartered Bank, and Goldman Sachs. The Nigerian book runners to the proposed issuance is Chapel Hill Denham Advisory Services Limited and FSCH Merchants Limited, who will act as financial advisors. Also, the CBN has released guidelines for establishment and the regulation of payment service holding companies in the country. It requires that companies who intend to offer both switching and processing as well as mobile money services should set up a payment service structure that will promote an efficient and credible payment system. Corner's half-year result is out, and it shows that the company's profit after tax went up by 213.7%. to 1.06 billion naira. We'll move on to South Africa. Telkom trading update for the quarter ended June 2021 have shown that the company's revenue went up 3.5% year-on-year to 10.62 billion rand, mainly driven by the mobile business due to growth in mobile brand customers, which went up 30.9% to 10.5 million, while EBITDA margin went up 7.3%, demonstrating recovery of top-line revenue and strong profitability compared to what was recorded in 2020. South Africa's third biggest telecom company, that's Telkom, says that it is appointed the head of its consumer business, Serame Stokobank, to be the group chief executive officer designate with effect October 1st, 2021. And still in South Africa, Liberty Holdings, the insurer and asset manager that plans to delist and merge with its parent Standard Bank, is already budgeting for at least 1.2 billion rand in COVID-19 related life insurance claims over the next 6 to 9 months. Liberty is actually bracing towards the fourth wave of COVID-19 infection, as it expects that the impact of the fourth wave will be much lower than what was recorded on the third wave in South Africa, especially as the country is now improving or gaining momentum on vaccination program over there. Zimbabwe's treasury is set to clear a backlog of foreign currency allocations owed from central bank loan auctions in the next 45 days. The central bank had introduced weekly foreign currency auctions last year to improve access to dollars, but traders and some commercial banks over there in Zimbabwe are complaining that the currency takes about 7 weeks for successful bidders to receive the allocation, which is disrupting companies' operations. And all of this explains why the Treasury is set to clear this backlog of foreign currency allocations. We'll move on to North Africa, where Fitch has raised its outlook for Egypt. The Egypt banking sector should be stable for the month of August from the negative outlook that was put out in July this year. Still in Egypt, the International Finance Corporation, IFC, has provided financing of private enterprise investment in developing countries around the world through the loans and direct investment from $100 million in private sector green bonds. Trade exchange between Egypt and Nigeria rose to $181 million in 2020, and the turnover of Morocco's petrol company snapped at risen 38.6% in the second quarter of the year. To wrap it up here from Frontier Africa report here, Financial Market Council is approving 2 management companies and 3 investment funds over there in Tanzania. That's in Tanzania's Stock Exchange. That will be all for Frontier Africa report. Thank you so much for listening.
Thank you, Faith. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we'll give you an opportunity to speak, or you may use the Q&A box. And for those joining us on Facebook, you may use the comment function and we will treat your question. So I have a question from Symbiote. When are we expecting the results for the Tier 1 banks, and what are the expectations? And are there potential pressure points that we might see in these results?
Thank you, Dozie. So to answer the question, historically, we expect to see these banks release their half-year results later in August because some of them will be paying interim dividend, and so this usually takes time. So, and our expectations on some of these results, we believe the results will be in line with what we've seen in Q1. For example, in Zenith Bank, we expect to see improvements in their non-interest revenue on the back of FX revaluation gains and improved fees and commissions. And also for UBA, we expect to see the bank consolidate on the profits they posted in Q1 with a continued growth in their net interest income and non-interest revenue rather. So basically, these results should be in line with what was released in Q1, with some banks improving on their revenue drivers while others remaining flat. I don't know if our banking analysts would like to add to what I mentioned.
Thank you very much, Kimbiat. So, like you mentioned, I think definitely the non-interest revenue lines are where we're likely to see the most gains in terms of income. And OPEX, the biggest pressure points are likely to be around regulatory fees. We've already, from the banks that have released, we've seen some significant increases in regulatory fees. Although we're not expecting that much coming from revaluation gains as compared to what we saw last year, there will still be a likely boost from that line item. In terms of the yield environment, so far we've not seen the kind of recoveries that we may have been expecting. So there might still be a bit of a lag in terms of transactions in the fixed income space. So that might also pressure their income on those lines. However, on a positive note, we've seen quite significant reductions in impairments, at least from the banks that have released and that we've reported on, FBNH and FCMB specifically. So if that trend continues, then that should also help to boost all the other banks that are likely to release. So you have your GTCO and then your Access Bank and Zenith Bank. And so these banks should also benefit from, increased recoveries and reduced impairments overall. That will be all. Thank you.
Thank you, Joshua. Sorry. We have another question, and it says, it was in the news yesterday that the World Bank approved Nigerian SDR of $3.5 billion, but we did not comment on it. I believe the fixed income desk will take this question. Thank you.
Thank you very much. Yes, the World Bank approved SDR globally, and the portion that comes to Nigeria should be about 3.5 billion. Basically, what this does is to help shore up the FX reserves of the country. And so in the coming days, we expect to see some level of, further support from the central bank to market with respect to the Naira. This also, when you add it to the Eurobond debt raise plan, continues to paint a good picture with respect to CBN having the war chest to further develop the Naira strongly. So this is positive for the country. We're waiting to also see details and be clear about when this is released fully, because again, the World Bank continue to ask for reforms on the back of the government with respect to fuel subsidy removal and power subsidy removal, amongst other things. So that still remains sketchy. The moment we have full brief as to if the World Bank still remains very bent on those, then we'll have further clarity and be certain as to what to expect and the full impact on reserves and FX performance. Thank you.
Thank you, Dapo. We can still take more questions if we have any. While we wait for potential questions to come in, just a quick announcement. Tomorrow, that is the 6th of August, Chiwete John Njokama, who is the CEO of FinTechnology Africa, will be speaking with us on opportunities in the fintech space. That is tomorrow morning at 8:30. There is another question, and it's also for the fixed income desk, and it goes, what is the timeline of Eurobond issuance recently just announced?
So with what we saw yesterday with book runners announced, and we believe, like we also had noted earlier, late into Q3 and early Q4. So we're looking at late September or early October for things to start materializing, basically.
Thank you, Dapo. I see that we have no further questions. We have now come to the conclusion of our meeting. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you all for joining us today, and we look forward to having you join us again tomorrow for our special session. Good morning.